All right, good
Yeah.
afternoon, everybody, and welcome to the Bookmap Academy meeting. We'll be going through the your content. That's the whole goal of the program here. It's a coaching and mentoring program. We wanted to offer the mic uh, up to you guys to explain your trades so we can give feedback. So we do this via the feedback that you present in the Bookmap Academy room or on social media, and then we will you put it into a spreadsheet. We take a look at it, and then we divvy it up between the coaches here, so that then you can get feedback from us. So that's the plan, and or the structure. There's more to it. If you want more, you can go to bookmap.com and you click on the more button up here, and then click on Bookmap Academy there under community, and you can go through it. So you apply, and you can actually get Bookmap for free as you go through the process. You can become a coach, you can become a streamer, etc. So it's a whole plan that we have, our process here. There's a few more news items to go through. So our blue jacket competition is back on. So if you're interested, you basically, if you're partaking in the academy, you might as well do this. Just hashtag free blue jacket with some of your content, your marked up charts and journaling, and then you may win over $600 in subscription value here. And it's working with X, Instagram, and LinkedIn. We have an onboarding schedule. Just continue to reiterate this one 3 times a week. So no matter where you are around the globe, we'll get you up and running in Bookmap. If you're new, how to log into bookmap.com, download it, install it, subscribe to data if you need it, and connect it to data and get a symbol up and running. Okay, so yeah, 8 a.m. East Coast, 4 p.m. East Coast, and then 1 p.m. East Coast time. We've got 3 different presenters. The Bookmap or Bruce's pilot program. So this is a program I put together. It's a subset of the Bookmap Academy. If you're interested in this, it is about building an edge. So a lot of traders out there that I've come across, that's what they don't have. And everyone hears that, oh, you need an edge, you need to back test, you need to know how to do this. And a lot of us try, but we don't know the process. We'll go through the process here so that you can have an edge in your trading. And it's going really well with the participants so far. Really, really proud of them. They're doing really great work. And I think we're on the right path here. If you're interested, I'll put the link into the chat for you, and you can partake in it. Okay, you will need to have Bookmap Global or Global Plus for it. And I highly recommend you have Global Plus because you can use replay mode on a different machine while you're connected to the live market on another machine. Okay, and let's see here. Anything else? That into YouTube there. Oh, thanks, Dan. Already put it in. The Bookmap Academy, this is our process. This is what we go through. And actually, we really spend most of our time on your setup and your marked up charts. This is actually the most mechanical part of it all. 1 through 3 are really important, but you really can't see that on the chart. You may, but anyway, number 1 is the impetus. What's moving the market? We need to know that. What is the market reacting to? Is it news? Is it technical levels? Is it both? Then we need to look at those key levels on those higher time frames and determine where do you want to deal. And then you're looking for scenarios and strategies. So like if price comes down to your area to buy, are you looking for it to kind of stop, run through it? and what is the scenario? What are you looking for when if it maybe rejects? Is that your idea that people are going to buy up the dips, or are you looking for it to trade into and through that area, come back, retest it, and continue on to the downside? This is important to develop these kinds of scenarios and strategies, because then you pick your proper setup that you want to trade. If you align your setup with these three elements here, you will have an excellent trading day. All right. And this is, like I said, this gets down to just mechanics here. You should know your setup intimately. You should be able to grade it based on the criteria you have in your setup, and then you're going to determine your sizing or risk for your setup. And then it comes down to order flow and execution. And that's what we really hone here in this Academy program. All right, a couple of disclosures and we'll jump in. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, so let's jump in. Let's see here. I've got Vinny up first here, so yeah, get up and we'll open the mic for you. And you've got Mark here, and you've also got Steven. So let's see who's in here right now that we can cover. We've got Steven, so let's invite. It's been a while, Steven, so let's invite you up to the stage, and then Vinny, take over. Oh, also, let me see here. We got John. We've got Trading His Life. We've got Shark. If you guys want to come up to the stage as well, DNT, and we'll get your insights too, since you guys are basically leading the pilot program, and we'll definitely have some good insights on that. Okay. Let's see. Right, there you go. Trading His Life is up. Okay. All right, Vinny, take it away.
Yes, Bruce, thank you very much. I'm so happy to be here today. And yeah, I just want to just before I delve into Steven's some trades here. One of the things you talked about was the hoodie. I actually got the hoodie, and
Hey.
I tell you, I've been wearing it for 2 days. It's the greatest, okay? And I was speaking to Dan about it. He has his on too. So I would encourage traders out there to really work hard to win that blue jacket, so you can actually wear a blue hoodie. So I mean, it's worth it. Yeah, and then I just want to send a shout out to Abe Crypto. I just read a message in our Academy room. He was on Chart Fanatics, which is a pretty big deal. So congratulations to him. And I didn't know about the pilot program with, well, I do know about the pilot program, but I didn't know that you can use the replay mode at the same time with Global Plus while you're trading. So that was something new to me. So thank you very much for letting me know that. I'm going to make sure I use that asset. But right into Steven. Steven, how you doing?
He's not up on stage here yet. I guess maybe we'll invite him again here, Steven. I don't know if, are you? There you are.
Can you hear me?
Yeah, we can hear you.
Okay, hello.
Hey,
Hi,
it's
everyone.
been a while. How are you?
I'm okay.
Okay. All right. So Vinny and Steven.
Okay. Steven, how you doing, buddy?
Good on you.
Good, good. All right. Hey, I got one of your trades up over here. And I just want to start off by saying that this is, I think it's really great what you got over here. You identify your trend break. I see a trend break was lasting for well over an hour and had a number of touches. Usually with trend breaks, you try to look for you know, if sometimes when you have a trend break 5 or 10 minutes, that could really almost be a sell off or a quick buying a buy event. But you identified your trend break over here. I thought it was really, really terrific, right? You drew your line, your yellow line. That was awesome. And you also used the subchart with the CVD signal, okay? And your CVD, you know, the VPI is part of the MBO package, okay? And that's something Bruce talked about with the Global Plus. So that's an opportunity. Once you join the academy, you can also, you know, you can use that asset that Bookmap provides. What I really like also is the way you label this is just you have a really an ideal entry. And what I really like also is the way you have your chart set up over here, because I can see the finer details in it. I can see your pullbacks. I can see where it broke the trend, right? And then you had your pullback. And I like how you labeled it past that midpoint, and you had an ideal entry. You actually labeled it. I think this is really, you zoomed in terrific. So a nice job, and thank you for displaying this. And I think, you know, this is a great example for the rest of the audience to really look at with the way you set up your chart over here. I also like the way you identified your buyers as well. Okay. And also the way you went ahead and targeted you had your target. Your target was about 12 points. So you actually used the target high over here, which is you know, just awesome. So I think you did an outstanding job with this. I did have a question. And one of the questions was you made an entry down over here, like to the left of your trend line. And so that was one of my questions, why you decided to enter there, only because it didn't break the trend line. And I was curious just to find out what you saw. Maybe I missed something. And I also saw your charts on the right. Okay, I think it's great labeling. And I was wondering maybe if it's maybe too much noise. Do you really need all this? You know, sometimes you can have you know, information overload. And so I was just curious on your take on that. So hey, let's throw the floor to you and let's take off. Stephen. No.
Okay, first thing I need the date. What date is this? So I can pull up on my end because it's a bit blurry.
Oh, okay. Well, I apologize for that.
Should be on slide 1, I think. Slide 1, if you have it. Oh, it says October 9th.
Yeah, I actually do. I did go ahead and list your slide 1s and slide 2s. Bruce, if you don't mind, he may have it labeled on his slide 1, and that might be underneath.
Man, I don't have it on my end for some reason. That's strange.
September 30th, maybe. No,
Okay.
this might be another
Yes, yes,
trade.
That's it.
No,
Okay,
that I think that is his one.
Oh,
Yeah, because
yes,
he had
okay.
slide 1, 2, and 3, and I use his slide number 2. So so it is September
Okay.
30th. I was smart
Alright,
enough to
so-
include the slides, all the slides this time.
Okay, thanks. Well, so we're looking at number 2 now, right?
Correct.
I don't trade the TBL, but you do see it here, and there are times where I do get involved in a trade, and you know, there's that criteria where it breaks above the trend line. But obviously, you first have the bullish accumulation, or the passive accumulation. You know, the 4 criteria that they look for. But what I did notice here that if you look at slide 1, it tells a different story, completely different. I have a reason why I'm getting in. I'm seeing buyers getting involved, and you know, I've got my stop below the high liquidity on the bid. But what ends up happening is it pushes lower. So you know, but I just stayed in. I had my stop. I had it like predetermined where, you know, if it gets below this, and then I'm out. So on slide 2 case, it did not hit my stop, and it actually caught bid. And if you go back to slide 2, you'll see I'm obviously notifying my actual entry, which if you look on slide 1, you can kind of see why I'm getting in. But if you look at this slide, you could say, oh, you're over trading, or maybe you didn't have enough conviction. Yeah, I can agree with that. But it, you know, it all depends on, you know, how zoomed in or how zoomed out you are. So you get different pictures and different reads. But I got involved thinking, okay, the buyers are gonna step in, because if you look on slide 1, I'm showing it on the delta bars where there's, but compared to the sellers, it's not so obvious. But you can see there on the bottom at 13.15, where I'm pointing out the buyers on the delta bars. Yeah, so I just stayed in, and then eventually it had, the buyers stepped in, and we started pushing up with higher highs and higher lows. If you go back to slide 2, sorry to jump around. It's a kind of I try to normally submit 2 slides. On this one, I submitted 3, but for context. And you can see, yeah, it's quite clear, and I think the trend line break guys would love this and probably got in by the ideal entry, which I'm pointing out here. And then if you see, there could be a second chance entry where, so we get the breakout, we get a higher low, and then we get another breakout, which at your ideal entry point. Then it comes back, pulls back, retests that section that was resistance, now became support, and then buyers step in again. That's where you would get your second chance entry. So if you're like really conservative, but I don't know if you guys know, but like I like to get in quite low, kind of picking up bottoms. I don't know, I just like that range, but it comes with risk, so it depends on yourself. In terms of your comment with my notes on the far right, I need that. For some, it may be very busy, but I do need that because I am auction market theory type trader. So, I look at those levels quite consistently. Sometimes depending on my focus, I forget about them, and then I end up, if I do get hit or take a losing trade, and then I'm like, if I review, I notice, oh, I wasn't following that. Yeah, so I need to follow that very religiously. Now my cat wants to walk on my laptop.
Yeah, and
Yeah.
and that's why you're crushing your trading. So nice going.
Not always, not always, but yeah,
But
when
yeah,
it works out.
that's something you had just mentioned about the trend. Now, Bruce, I think Bruce can expand upon that as well, because I believe your trend, you really focus on the pilot program. You focus on trend lines and trend breaks. And Stephen, I don't know if you're part of that program, but if not, as is
Yeah.
maybe you might be interested in that. But hey, let's throw it right to Bruce. Bruce.
If I may add, I am
Sorry.
part of it. I do follow it. I like a lot of the order flow concepts. I love like when the sellers are pushing price down and trading into the high liquidity on the passive side on the bid. I like that stuff. I've incorporated that. I think it's a good program for any beginner because it's focusing on like it's a small checklist, very simple, and it's somewhat mechanical. Just for me, it's I take what I like and I add it. But I've been busy with something for a while, so I don't want to change. Yeah, I just wanted
Nice,
to add
keeping an
that.
open mind. Nice going. All
Yeah,
right,
you have
Bruce.
to. You have
I'm sorry. Go ahead.
Yeah. Just to comment on that, Stephen, because originally you were one of the handful of people that I thought this program would be perfect for, and I was kind of surprised that you really didn't take it up. Uh, and what you just said, like I don't think you should take it up. And hear me out, just because like if you want to take bits and pieces, that's fine. But this is, I don't think it's necessarily for beginners, but it is a process, and it is simplified. And if
to.
you're doing other things, then you're not following it. And if you want to do other things, then you shouldn't be in the program. This is just really stripping it down. We are looking for building an edge that we trust, and taking it again and again. And then the trendline break accumulation trade is just one setup. We're already starting to dabble into some others. But we'll have these kind of building blocks of order flow, and we chose this strategy to begin with because it has multiple or yeah, it's only four elements, but they are very important. And once you start to understand those, you can apply it to many different styles of trading. So I'm going over this just because for anyone in here who's interested in the program, then that's great. Would love to have you in it, but it is pretty what's the right word, constricting or rigorous, or I don't know. It's like you don't want to stray off of the plan. And we just find that I have found that the more people stay focused on it, the way better results they have. And let's go over Steven's stuff, and then I'll open it for Shark, DNT, Trading His Life, John, whatever, whomever wants to comment about the pilot program, just to give a little more insight, because it's really important. You have to take these things off your chart, and only study these four elements, and then the world will open up once you get these things down. Let me see.
Well said.
So sorry to belabor that one a little too much, but like anyway, getting back to your setup, yeah, it's very much in line with it. I understand why you got in. I get it. You see a stop run through a key level, and it just pushes down to the next level, and then it reverses. And you stuck with it. It's up to you, like on how you want to manage that. If you want wider stops, or you want to just get stopped out and then get back in some of the entry areas that you chose here, which are perfect, and it is very much in line with the setup, very much so. So anyway, the elements are here, the accumulation, and we also get a flag pattern out of it right here, which I want to talk to you guys in the pilot program about the flag pattern. This understanding that accumulation will come in very, very handy. Passive accumulation will come in very, very handy for this flag and continuation pattern as well. Let's see. You nailed it though, Stephen. This is a great trade. It's a great setup. The only comment that I had for everybody, pilot program, academy, whatever, is these days when there's volatility, price continues to go. So you're kind of looking at, you have to be kind of careful. If you're trading a reversal pattern, then the moves can be excellent, but they usually go to higher time frame levels, and then even go through those a bit before anyone's willing to come in on the other side and buy. And that can be really kind of tricky. But when you start to see the distinction, you started to note this, Stephen, here, this is why you got in too. You saw some of this buy volume. The idea is right. Bigger picture though, as you zoom out, you can see like this is still in control. Now it's looking pretty good. Now it's turning around. It's super easy in hindsight, of course, but on these bigger days and more volatility and these big moves to the downside, the moves to the upside will be pretty big too. Just look for that transition to be pretty big. It'll hit you over the head, and it's just waiting for it, I think, is challenging. That's everything I have. Let's see here. Who should I turn it over to? John, do you have any comments?
I do, yes. I love the ideal entry and I love the second chance entry. Um, but the actual entry, I just think you're taking on an enormous amount of risk. In my work, I'm very much about the levels, like what you have over there on the right, and you should have those if you base your plan off of that. But in real time, it is the main chart that rules. And when you have a trend line going down that you've drawn perfectly, you have the volume dots that are all red, you have the liquidity all below and very little liquidity above. I don't know where your target would be for that entry there at the actual entry. So I do object strongly because I think you're just going to take a lot of drawdown. It's a counter trend trade. So you got to wait till it changes. You need to wait until that trend line is broken, and then you see a shift in liquidity from no more below to filling in above. And then you have something, and that's what you had at the ideal entry and the second entry. That's beautiful. But like Bruce was just saying, in these volatile environments, especially on a counter trend trade, you need to be on the right side of the trend of the price trend and the trend of liquidity. And if you're on the wrong side of that, that can get expensive, which is what you saw there on your drawdown. I just thought the drawdown was unnecessary, but I do think everything else that you had there was great.
Yeah, nice comments. I also agree. Like I kind of forgot to mention that there, the structure never broke. You might have had a more kind of aggressive structure that was getting broken, I guess. We go back to the other image. But you got to wait for the structure to break. And I've said many times over, like the trend line is one structure, but it can also be a horizontal structure like this. And you can see how perfectly, you already mentioned it, Stephen. It broke out, retested it, and then continued. So it's really about the structure break, not necessarily the trend line. But anyway, yeah. And any other comments? I agree. For me, like this is just way too much over here. Like what Vinny has said, maybe too much noise. But if this is what you follow and this is your plan, and you're relying heavily on these in here, I just it's hard to in this image. It's hard to look at and kind of understand which one are you looking at. Or are you just looking at a cluster? Um, and maybe that's enough. Maybe the cluster here, and maybe looking at clusters here, and that's where you'd also be looking for high liquidity and a take profit. Anyway, let's see. I don't know. Shark, I don't know if you have any comments.
Am I audible, Bruce?
Yes, perfectly.
Okay, good. I had to run through a different computer. You know me and technical difficulties. Stephen, if you had wanted to post this in the pilot program as a trendline break accumulation, your 4 criteria are met. You have passive accumulation. Yep. And you have break of structure trendline. You have aggressive accumulation. You can see it in your delta bars at the bottom and your delta bubbles. And your entry would have been, possibly right around there where Bruce just circled, or on the pullback back into that minor rally high exactly. And then you have just aggressive accumulation all the way up to what I use as a target. One of my targets, if not the target, is the trendline pivot high. So you tick all the boxes in that trade right there.
Yeah, and his key level too.
Oh, you have a whole stack of key levels right there.
Yeah.
At that trendline pivot low.
Yeah.
He crushed it.
Yeah, you have overnight low, low of day, high of week, and a value area low, all stacked up right there.
Yeah, which begs the question though, Stephen, like well, why wouldn't you wait for that level? Why did you get in early then? Stephen, you're muted.
If you look at slide 1,
Okay.
you'll see. I thought that was the level. Well, I thought buyers were going to engage, and then I was waiting for it to break above structure, my structure, not trend line, and it ended up pushing lower, taking. I'm assuming the sellers wanted some more stops, and then it reversed. But like I said in my message here, I don't trade the trend line itself, but I do draw it in for visual aspect. I've always used the trend line in my past slides. You know, like sometimes you see like, oh, I can draw a trend line here. But yeah, the points you bring up are valid. I agree.
It's,
Thank you.
I like it, Stephen. I just wanted to point out that I'm not saying join the program or follow
No, I
the
am.
criteria, but that
I'm part of
trade
it, of
does
course.
meet the criteria for that trade.
Yeah. No, I totally agree. It's just, we have to decide where we want to put our focus. And
Exactly.
I've been busy with something for very long. So
Hey, Stephen. This is Vinny. I just had a quick question regarding your actual your entry that you did. Only because of what you mentioned. Did you use your intuition and anticipation for that to go, or you know what I'm trying to say? And I also, my second question was, what was your risk reward ratio on that, please?
I don't know. It looks like about 10 points.
Okay, yeah.
I would say a bit less than 10 points, maybe like 8-ish.
Okay. Oh, so that was your stop target. So you had about what, 8-point stop?
Yeah, I still adjusted.
Something like that.
Well,
Yeah.
you can, if you look at slide 1, you'll see I had it below the high liquidity on the bid. So I was hoping that high liquidity would be my barrier to protect me from the sellers. Yeah, and
Sure.
it did work out, but it is a bit of a risky one.
Made you a little nervous. I mean, you might have made you a little nervous watching that go down a little bit. But yeah, so yeah, Bruce and also Shark mentioned some terrific points about that trend line break, and I know that's something that they've been focusing on quite a bit. So yeah, you may want to consider stripping down a little thing and even honing your focus in even more. Again, I really like the way you set your chart up over there. I'm able to see the finer details. Sometimes, you have bubbles on top of each other. Sometimes, you really miss those finer details. So you really lose out on some money, and maybe it also hit your stop losses a little bit more often. So what you shown was terrific. So outstanding. Keep it up. And how about trading for life?
Yeah, hello. Can you guys hear me?
Yes.
Hey, Stephen. I just wanted to say, like John said it perfectly, and Bruce, like, it was still on a heavy downtrend. I mean, the structure was never broken, so um, that alone would have kept me out the trade because the structure wasn't broken. But I'm not gonna get too much into it because John and Bruce already said everything that I was gonna say. The only thing that I would just suggest that you don't have to you don't have to continue posting, but the setup. Once you see the setup, why don't you just wait and take it? I mean, like if you would have just waited and take the setup, that would have kept you out of that drawdown. That had to be painful. Like, all the criteria was there. You'd be like, hey, this is the trend line break accumulation setup. I would have been all over it. That's all I just wanted to say. I mean, the setup. Once you see it, take it, and then you could just add the setup to your playlist. Like that's just one strategy that I can add to my playbook besides whatever you're working on. That's all.
Yeah, and we've all been there before. We all we all enter our trades a little bit early sometimes, and we kind of get a little nervous watching it. But yeah, well said, trading for life. Yeah, Bruce, right back to you. Anybody else?
Yeah, first off, trading is life. I'll let you go first next time. So so you don't have to say like, oh, he already said it all. And DNT, any comments?
Hey, how you guys doing?
Doing well. How are you?
Doing good, doing good. You guys said it great. You got it, man. This is a great opening session already, and I agree with trading is life. I think you guys said a lot and covered covered everything really well. And Steve and I, everybody trades differently, and I think we trade pretty similarly. So I know what you're saying. Those levels on the right kind of remind you, take your eyes off the trigger chart sometimes and look at the intermediate time frame. Zoom out, look at your charts. They're good for me too, to kind of take your eyes off the trigger chart and actually look at the main chart. So I know what you're talking about, and I have the same issue too, where I anticipate the trade and I'm entering in the trade before it actually sets up and my criteria is all met. And we all do it. And yeah, it's something that I wrote down kind of as something to work on. It's I do it often, and I do it I do it as well. So like I know exactly. And then what happens is you take a loss by entering too early, and all your criteria is not met, and then you forget that then you got to try to remember that my trade was actually after the criteria was met, and then hopefully it didn't take your eyes off of the charts, and then you missed the trade. But yeah, it's something that I'm working on too, man. So keep it up. It looks great. I like everything that you said upon coming in too.
Right. All right. So let's see. Covered that pretty well. So Vinny, I think you have another one here too, or is this?
No, yeah, you can bring up that second to last one. They're both really kind of similar charts, and you can click either one. But Stephen, I was just a little curious because I went back looking at some more of your trades, and I noticed that you look at these sharp drops that I see over here, and I didn't know if that's something that you focus on, that you look for, these sharp drops, to possibly enter. And so that I didn't know if that was part of your strategy, and maybe you can share a little bit about that, because that my other chart that I have of yours shows the same thing. So yeah, I was just curious. Any thoughts? Share.
What are you asking? I'm not too
Okay.
sure the question.
In the white box, there is a very sharp drop over there. It's between about 5 or 10 minute drop, and I didn't know you have a line drawn there, and I don't know if that was I don't know if you drew that as a trend break, because typically trend breaks will you want to have those a little a trend line break is usually a little bit longer than just 5 minutes or 10 minutes, because that would be more or less as of a sell off. And the reason why I posted that is because when there's a sell off, what happens is you create a little bit of a gap, so an imbalance between buyers and sellers. And so, traders, they want to go in there and try to rebalance it. And sometimes it can go hit a double O, or even drop down a little bit further, as in this case. So that was my question. I didn't know if that's what you look for as part of your strategy. Is that another part of your strategy? Is that what you look for, is a drop like that?
Yeah, because so basically we can see the intention of the market. It's selling off. And if you read structure, my type of structure, you can see it's pushing lower, and it's finding resistance at like 67.70. You can see it retested. You've got the VPOC that moves down. We get a retest of the VPOC. So yeah, I take a short, put my stop above the structure, and I'm targeting the high liquidity on the bid. This isn't a trend line break. Like the other one, we see that criteria in there, but I wasn't trading that. But
Okay, so you were trading the pullback then. Do I have that correct?
sorry.
You were trading the pullback, and what exactly was the level that you were focusing on in that pullback? Was there a something that stood out to you? Was there a liquidity level? Was there
It's
percent of a pullback?
So basically, we opened that overnight high. We failed to break above it. Buyers tried. They barely got over the overnight high, which was all-time high as well. Sellers took control. If you look at the delta bars, you can see we have a lot of sellers. Yeah, on the delta bars, you can see sellers are dominating. And then we also had a VPOC shift. So basically, you know, it's moving away from the open. So if you look at my points, I'm pointing out the high liquidity on the bid. Number 2 is my levels. So overnight VPARK, overnight mid. Those are levels that are important to me. I'm using that as structure. Then you've also got the heat map structure, the LVN on number 3. So session volume profile LVN. So that is also part of my structure that I'm targeting to be my resistance. And
Okay.
so I was
And
more
you use your VWAP as well, it looked like.
Yes. You know what? You just reminded me. I know you like VWAP and mid, but you like it in the case to take targets off that, right?
I don't necessarily really trade the VWAP, but I think another trader does. But please go on.
But okay, it's in here, but I don't trade that. You must remember, I'm trading structure. Um, well, auction market theory structure, and so you can see I entered short. I took a scale at number 6, structure support, and then I just held on, and then you can see it retested the POC, failed to break above, and then eventually it targeted the high liquidity on the bid at
Yeah.
87, 67.57, which
Yeah,
was
I like it. Yeah, I like your trade. I actually took this trade as well, but so I wanted to hear more of your analysis. So thank you for sharing that with me.
Yeah,
If you don't have anything, go ahead.
I remember a while back you mentioned there was a trade you were giving me a comment on to take targets at mid or VWAP. I think it was VWAP you specifically pointed at. But just to make it clear as well, I take trend continuation setups and counter trend. Now, some may say that is quite risky, and especially when you're still developing. You know, I've been doing this for a while, and you know, I do little pieces, and I'm constantly refining, and so there's no one specific style, but I do try and keep it structured. So that's why you kind of see like, okay, one day you're doing this, the next day you're doing that. But you know, it depends on what's happening in the market as well.
So you're using impetus as well, it sounds like.
Too sure of the definition of impetus, but you know, we all see it differently. I try and do what the market is telling me to do. I do look at news as well, but it's not a very important factor. Obviously, you know, everyone is different, and I don't want to say what's right, and I mean, this is wrong and this is right. You know, I'm not that type of person. Even when I give advice to people, what works for me may not work for someone else. So that's why I like I trade lightly on those areas. If that
Understood. Understood.
makes any sense. I try
And
and be respectful in that sense.
understood. Yeah. Bruce, toss it back to you.
I'm going to throw it over to Trading His Life and let him comment here, even before John. So he's got fresh ground to cover.
Go for it. Trading is life.
Oh, thank you. Now you throw it. The other post was just the one that was my special, you know? No, I really don't have any comment on this one. I mean, I'll throw it back to John, dear, you know.
Okay. Okay.
Thank you.
All right.
Nice try, Bruce.
I tried.
Stephen, I thought it was a nice trade. You know, it's essentially a VWAC continuation trade, and you're going with the trend. The imbalance of liquidity is below. I thought it was perfect. The only thing I would add, and it's getting a little bit picky, however, it does address risk. As you were working down towards your exit target, I do think that you could have brought your stop down a little closer, just above that liquidity that had built up around 67, 64 in that area, right above POC. You know, something
I did
like
it a
that.
bit
But
low.
other than that, I thought it was lovely. Just really good. I think you were in tune with what the market was telling you, and A plus.
Yeah, I know you like to get a scale and then, you know, cover your risk quite quickly.
Yes.
If I may add, my mindset towards that, I've done that before in the past, and sometimes it knocks me out, and then it goes for my runners, like would-be runners. So what I normally do is I wait for that break of structure. So if you look at my scale level at number 6, 67, 62, 50s, once I get that break there, then I would like trail or reduce my stop a little. I don't know. It's somewhat dynamic how I manage that, but I don't have a complete rule set because sometimes the word dynamic, it's like flowing, but it depends on my read. If I see, yeah, it's a tricky one. I don't know how to answer
Yeah,
that.
I don't have a fixed policy either for running stops. I just duck behind the liquidity. I just use the liquidity as a shield, and
Yeah,
that's what I was talking about there. And that in itself keeps you dynamic with what the market is doing. Because would you want to be still in that short if it takes out that liquidity at 67, 63, that broad-based liquidity? If it's that strong to continue going, I would want to get out. So that's why I'm saying, and the POC's coming down with you. So, but no, that's really kind of splitting hairs, but it does address the risk about staying in and keeping your stop, because in these volatile markets, it can turn on the dime, and I just hate to see lose ground, the good ground that you were able to gain in this trade. So that's it.
thanks.
Hey, Stephen, I did have a quick question for you. Do you use a trailing stop?
Yeah, it's on
Automated
this.
trailing stop, like something that's automated. Or do you mean like when I manually move it? A trailing stop?
It would be automated, so you would have a trailing stop. I mean, you can move it up as well, but
No, but I do have a ATM that you can program like that. But sometimes it moves it too quick. But sometimes it's nice because it locks in that profit, and then it gets you out with something. And then sometimes it knocks you out, and then it goes without you, and you're like, damn it.
exactly
Um,
right. That's a very good point that you bring up because yeah, you go ahead and do your analysis, right? And you have your target, you do your analysis, and you have your theory in place. And so when you go ahead and have that trailing stop, you're almost inviting it for that pullback to take you out. And just like you said, you get, oh, wow, I had this theory, it's playing out, and now I have my trailing stop. And so you don't give yourself a chance for your theory to play out. But I did go ahead and include a poll in the chat room. Do you use a trailing stop or not, for the audience if they want to go ahead and share what a yes or no. Bruce, right back to you. I talk too much.
No, I'm going to kick it on down over to Shark yeah, we went through Trading's Life, Shark, and then DNT, and then I'll come in with if there's anything left on the table.
So my lens sees a volatility contraction break low. You guys have seen me post it in the past as calling it a peanut butter and jelly, this sort of bouncing ball effect, and then the floor falls out from under it. Yeah, exactly. That break of that lower structure, Stephen, I mean, that would be a really ideal entry. But you obviously had the right idea, and you trailed your stop as good as it could be. You got it right above the pivot high. You don't get stopped out as that ball loses momentum, and I like it. Great trade.
Yeah,
Hey,
this is using Bookmap to its power. It shows you where these levels are if you're in sync, and that's I think what I'm trying to flex here. It's a really
Good work.
powerful tool if anyone's watching.
DNT, do you have anything to add? No.
Oh, sorry about that. Yeah, no, man, everybody said a lot of great things. I think y'all are pretty right on. Stephen mentioned Bookmap, the power of Bookmap. You can see like where he has that number 4 right there. Buyers make that push, and you can see that buy delta right there. It's kind of like a stop sweep. It's like a perfect test of that VWAP right there. and good order flow event trigger, and then he just pounces on it. So like I was curious, like is that kind of like a low volume pullback almost after
Yeah.
you get this like low volume pullback? Is that what that is? Kind of.
Yeah, kind of. But if you zoom into the nano microstructure, you can also say that's resistance. So you're taking a bit of a gamble there. Like, okay, I'm going to short, put the stop just above, and yeah, get a scale and then hold the runner. And you can see I got the scale and it came back up, still respected the POC line, and then eventually it targeted the high liquidity below. But also, when you on the open, I'm sure DNT, on the open it's kind of iffy. You don't know what's really happening. My plan here was I'm going for overnight low liquidity, and that's how it played out. Because some guys that are very good on the open, they would have shorted at the open already at 67 80s, 67 70 78s, around there, because there's the structure. But you have to really zoom in and you have to be quick on the trigger, and I'm sure DNT, because
Yeah,
but it's risky. So what I do is I wait for that first move. Well, in this case I waited. Sometimes I don't wait, but maybe sometimes it's best to wait. And it showed me, you can see clearly buyers got got the bus gone over them. If you look on the delta bars, you've got the
I think
sellers are in control.
I think
With
it's
the first
great. You have, yeah, I see three things. You have like your openings, you have your opening swings, right? And yeah, I'm not too great at the opening swings, especially if the open is within yesterday's range. So you get that opening swing low, then you get this opening swing high, it misses opening swing high, then it breaks out. So that's a huge impulse down, like 10 points or something. So that really tells you a lot on that impulse down. So I know what you're talking about. And it does, and then you get that pullback continuation to the VWAP, and that continuation down, and you have a lot of room. Like your R factor is really good on that trade, and that's a perfect trade. I think that's perfect, man. And your stop, yeah, I mean the stop thing is debatable. I usually keep a wide stop as well for to get to my target, like Vinny said. If you had your plan kind of laid out and you choke your trade, it's easy to miss out on your R factor, and it does happen a lot too. So, so I like it, man. Good job.
Thanks, bro.
Uh,
You've been on me for 58 minutes, so
hey,
anytime
well,
you
we
guys
haven't
want to
been
wait
on
me,
you though for a long time though, Steven. So
I don't want to take the spotlight for too long.
no, it's fine. It's fine. We're almost. I mean, I just have a couple comments, and then we can move on. But it's really good trading, Steven. This is a great trade. And just to point out, like we have something similar here from that is that wedge pattern setup from the supply and demand setups from the Learning Center. It's pretty similar to it. So I mean, the like you identify this, the sell off at the open here. So I think DNT or Shark, we can still hear you, or somebody there.
Yeah, it's not me. I think that's somebody. I
Okay.
think
I
maybe
think it was
Shark or
Shark. I
something.
think it was Shark. But here's your impulse move, right? And then look at chop around. You said early on, like they failed to get higher here. And then you have a lot of other confluences and other things that you're looking at, and POC coming down, your VWAP coming down, and you notice that this is heavy selling. So great momentum trade. You kind of wait for this to kind of peak, and then you get in and you write it down right. And I love your first scale here. I think it's fantastic, right into the high liquidity. because you usually you're going to get a bounce there, and we don't know, what's going to happen. But you stuck with it, let this thing ride out, and it did exactly what you thought it was going to do, and you took your profit in a great place. Great trade. And what was I going to say here? Oh, just there's some kind of catches in this setup that I kind of struggle with. It's this, and you can see this now. This one kind of broke the swing or made an equal high here. Now it didn't come back up into here, and you had pointed out that it's also your low volume node. Here, let me just zoom out a little bit. So you've got this, going for you too, this is powerful stuff. It does not want to auction here, and it's coming up into that area, and it just can't get in there. And then you take the trade right down, looking for that momentum, and boy, in hindsight, it looks beautiful. But I also understand, like, you had a runner. I would be looking for this to come down here quicker, but it took a while. Now I know this is, that 10 a.m. time, and this happens a lot. Sometimes it even kind of goes back up in here and fills in a little bit, and then it rolls over. That's another setup in that that course, the mid-morning reversal, failed mid-morning reversal here. But like anyway, so it really looks like a head and shoulders or something that's about to break out, fills in here, then it rejects hard, and then you get trend continuation. So way to read it. I mean, like way to read the trend continuation 1 and 2, and order flow events in here going along with it, right down to your target. So beautiful stuff.
Hey Bruce, this is Vinny real quick.
Yeah.
Yeah. Hey, you hit it right on the spot. Thank you for mentioning that, and with the low volume zone over there, and that's what happens when you have a quick sell off like that. It forms a gap, and so you have that imbalance between buyers and sellers. So you, and that's where it's indecisive, and it's just what you said. Because it was a challenge watching this thing as it was happening, unfolding. But yeah, you mentioned the low volume zone. That's exactly what happened, and then you had it drop. So that was well said, and yeah, good going with that.
Yeah, and I'm Stephen. I'm really happy to see you take a trend continuation setup like this.
Yeah, if I may add quickly, I'm sure you guys know, like, I'm quite greedy. I go for like long moves. In this case, you can see I'm quite conservative. I take a scale and then I'm like not sure if we're going to get the break. The reason why I do this is because I'm unsure of like how it's going to play out. So I need more of the day to unfold, and then I would like change to more longer targets where. So like my approach is somewhat dynamic, but like with the open it's very tricky. And one more thing, let me add. Tom would be short at the open. He's looking in the fractal there, and then he would take his scale at the structure, obviously structure support, and then he would take another target at overnight low. I mean, not overnight low, overnight VPOC. So that's the ETH POC. So it's. I just mentioned that to show the different mindsets. So he's more veteran. He's been doing this for very long, so he's good. Where this approach that I took is more, it's a tricky one. It's conservative and kind of aggressive because I'm also in the middle. They also say don't dabble in the middle, and if anyone knows that saying. Why that's funny. But anyways,
I know
I just wanted to mention that.
Okay. Vinny, you had any other comments?
No, you guys hit it on the spot. Also, Bruce, you referred to that wedge pattern. That was excellent visualization there with what Shark had mentioned. Although I like his PBJ reference better, but still, well done by everybody. Analysis on Stephen, Shark, John, D&T, TNT, Dan, Bruce, Trading for Life. Thank you for helping me out with Stephen. And Stephen, you were just iconic. Nice going.
I'm getting there with everyone's help.
Okay.
All right. Let's see here. Let's move on.
Thanks, gents. Take care.
Okay. All right. Thank you, Stephen. Good to have you up on stage.
All right. Appreciate it.
Let's see.
I do have one more with Mark, but he's not here. But there's really not much to comment on his because it was another great setup as well that he did. I mean, we can talk about it, but yeah, I mean, he did another great. I didn't have any comments really about his because it was so good. I was hoping he would be here to share a little bit more of his insight on that, but we can move to another.
Okay. Yeah, maybe unless something like pops or stands out for anyone else here. While you're looking at it here, just a shout out to here in the audience, Matt. Of course, we've been covering you, but Lo, you've been doing some really good work. Also, Robert S. Duzman. I think that's at least what I recognize in here for now. And you guys, I mean, just great markups in the pilot program. And here's a great example. Mark also has been doing some really excellent work and reading it. These elements really well. You can see it just hit you on the head here. The four elements. And I know a lot of you guys have kind of said, "Oh God, can't we just go with a trend continuation pattern or something else?" But really, I'm gonna kind of stick to my guns. Just get this under your belt of understanding this passive accumulation, because once you do, I mean, look at this book flip here from offer to bid, and all these things will start to really align when you start to understand this context and relationship with that passive accumulation. But yeah, you got his passive accumulation. He's got a structure break, which is a trend line. Also, there is kind of a horizontal line here that breaks. And then there's another one here. And you can see that that's exactly where it retested here again as well. So these structural areas, you'll see multiple structural areas. And buyers were above it and they held it. And then, they're definitely accumulating and moving price right up toward the high liquidity and the swing up here. So it's a beautiful chart. So I don't know. Anyone else have some comments?
Well, this is just Vinny.
Yeah.
Yeah, this is just Vinny. Yeah, you hit it, Bruce. That was consolidation over there that you just mentioned. Yeah, so there was a lot of accumulation that you were talking about. So it looked like this was going to go much higher, and I went back and rechecked, and it certainly did shoot up much higher. But yeah, well said by you. Next.
These are the nuances that you see in the trend line break. It's that liquidity on the offer above. Is that liquidity? Maybe not. Maybe it didn't come in until after the impulse, but the impulse is another one that really kind of adds to that. But you got to be careful, because if that trend is strong down, that impulse could just be like a relief, some profit taking, and then just continue down. But like if the context matches well, and this looks really good though. I do look for that impulse as a nuance, and if the liquidity is on the offer, it's just like a beautiful target kind of. I don't think it is here. It's that red line going horizontal, but it looks good. And that passive accumulate, you mentioning that passive accumulation is a big deal too. The importance of it.
Yeah, absolutely. I mean, talk about nuances. I'll let you guys jump in just a second, but I mean, this is just such a good example. Look at it, even starts over here. There's still a ton of liquidity in here, all in here, all in here. And then here's the nuance. Look at the reaction. It's like vertical, right? And then it consolidates up here. You don't get a pullback. I mean, this is the pullback right here. So that's one of the nuances when you see all of this high liquidity getting filled in this rubber band, kind of effect. It's oversold and there's tons of passive accumulation here. This is typically the reaction is like a strong impulse move with no back, and then it does something like this, and then it can go straight up again. But I will open that to Shark.
I was just going to emphasize the same things you just said, Bruce. I mean, this is a really good example of the trendline break accumulation trade. I'm looking on the chart, and I don't see where his entry is.
Yeah, I was gonna say the same thing.
No, it says
But,
right here, entry retest after
okay.
strong buy.
I think he
Right,
has it number 3.
right here. It looks like.
Yeah, no, fantastic entry after his aggressive accumulation.
Yeah.
Buyers come in hot, pull back, he gets in.
John, do you have any questions or comments?
No, nothing to add. I agree with everything that's been said here. No.
But trading is life. Jump up on stage here.
No, I agree with everything that you and Scott said.
All right, I'm going to let you go first next time.
Yes. When it comes to trend line accumulation, yes.
Okay, all right. We'll come across another one here. Yeah. Anyway, like I said, you guys have really been doing some great work, and I think it's really been literally like paying off for you. So stay on track. Don't get distracted. Stay focused. Keep it simple. And we'll move on, through, like Bogdan was saying from Axia. We're going deep right now, going deep into one specific thing, and we will have to go wide a little later as we kind of mature and get better at some things. And the nuances is just kind of a start. Another setup will be a start. I mean, just think about it here. Let me blab for just a minute longer. Like, the continuation move. Well, you can start to look at, well, he got in on this pullback here, right? Mark this up a little bit better. Okay, so here's his swing. Oops, I'm sorry, not that one, this one. Here's his swing. He got back on the first pullback here. Excellent. That's excellent. It doesn't quite make it up there immediately. It comes pretty close. It hits some of this high liquidity here, and then it just doesn't quite get it. Pulls back again, and it pulls back to this structure here. But let's take a look at it here. So you'll see the same kind of idea, but in a flag pattern, impulse move, and then you've kind of got this downtrend here, like micro kind of downtrend. And it is breaking, and it is breaking on volume, as you can see. So where would you be looking for? Okay, we've even got high liquidity down here. We've got structure down here. So this is it's only one level of high liquidity, and it traded too, right there. So then it rejected. It came back up. We found some aggressors, and that's when you can start to look for. So it's really the same setup. It's just a nuance where there's not as much liquidity getting filled on the offer passively. Okay, I think that's that one. Unless any more comments. No. Okay. let's move on. And I think we've got Mobies, I think, here. I know I have it.
Yeah, Moby has Laura and Duzman.
Okay, so let's get that one. Hold on just a second, guys. I lost it. I had it open.
You're doing great, Bruce.
Okay. Okay, and Laura is not in, fortunately, but Duzman is here. So there we are. All right, and let's get Duzman up on the stage. Go. All right, so Duzman, why don't you, take us through, and then we'll give our feedback.
Yeah, for sure. So for this one, this was yesterday, and first thing I messed up. Well, there was two things I did wrong. First was the yesterday's high. It was nowhere close to yesterday's high. Price didn't even cross yesterday's high. But I had my eye on it. It kind of influenced my decision, so I decided to put it here. And also, I moved my stop way too early, and it ended up taking me out. So, yeah, overall, that's where I think the trade really messed up.
Okay. Trading is life. You're up.
Okay, that's what I've been asking for. Thank you, Bruce. I just want to say, Guzman, you've been doing a really, really awesome job with the trend line breaker combination. So just keep it up. You've been doing a great job. Um, I see how you have all four elements are there. I see your passive accumulation. Um, you waited patiently for your trend line to break. And once your trend line broke, I'm trying to see, did you wait for the pullback? No, you didn't wait for the pullback. That's why you end up getting stopped out. I'm always looking for that, guys. Try to always wait for that pullback. You see, because it broke the trend line. Your aggressive recommendation was there. Once it broke the trend line, it went to the liquidity area, pulled back, end up going the other way. But if you would have waited for the pullback, you wouldn't even took the trade.
Yeah, well, for the pullback, it's not that visible, but and I probably did it wrong if it isn't. But right where it says number 3 and number 4, price
Yeah,
broke
but
through.
yeah, I
Yep.
saw it. But
Okay.
the pullback was I saw it. It pulled back. The pullback I'm seeing was before the trend line. It broke the trend line, right? It didn't go. It didn't fully break the trend line. It pulled back. Then after that, because I would have waited. You see that liquidity area where you have the number 380 right there, where those numbers where you got stopped that out. I would have
Yeah.
waited for
Okay.
it to break that as well, and then I would have put my stop loss right, like John said, right after that liquidity area, so you could use that liquidity area as a shield to block from you getting stopped out. That way your risk wouldn't have been that much. But other than that, it was a great trade. Just It was a
All right,
great
thank you.
trade.
So just one question about the pullback. So would you say you want the pullback to be away from the trend line? So price breaks, pullback does not go
Well,
back into the trend line. Mm,
well, the way I do it is that once it breaks, like
mhm,
right there, you see you have the liquidity right there. That's telling you there's sellers waiting there. So I usually,
mhm,
if there's no liquidity there, I usually see because sometimes I miss because I missed a trade. Because if there wasn't no seller there, your pullback sometimes it goes, but sometimes it'll pull back right after it breaks the trend line. Right after it breaks the trend line, it's like an impulse move. Then you would say like it will breathe with a small pullback. But if I see there's liquidity right after the trend line break, I wouldn't even bother getting in because that's telling me there's sellers there waiting to push price right back down. So I would let it get the absorb those sellers, pull back, and then once it passes that, and then I start seeing momentum behind it, meaning buyers are behind it, then I would get in the trade and just write it up, get it in with with the other buyers,
mhm.
if that makes
Okay.
sense.
Yeah, so would you say the better entry would have been where my stop loss was since it broke away from the trend line, fill the liquidity, and then retrace?
Yes, that's what I
Okay.
would have. That's where I would have got in, and I would have put my stop loss right under the liquidity area.
Okay. Okay, got it. Thank you.
Back to you, Bruce.
I'm gonna let John jump in.
Okay. Um, you do have the trend line break, but if you look at the bigger picture, you've got a slow progress going up and you have massive liquidity at 6,800 above. So as long as you have that above, bigger picture, I just see all up in here. Um, so you get the trend line break, which I understand, but where your entry is, right? A little bit lower, Bruce, right where he took his entry at 87 and 3/4. Yeah, right in there. If you look below it, there's not much liquidity. I see where you have your limit order down there, but there was no liquidity there. So for me, no liquidity is no target. No target is no trade. So
Mhm,
I'm not seeing that. And then you get stopped out, which I would expect because you had the liquidity kind of balanced in there. The market did exactly what the liquidity is telling you, is that it's just going to go back and forth, and it probably made its progression up to 6,800. But I think you just
mhm,
have to be mindful to look at the bigger picture and see what the liquidity is telling you. And this was all liquidity above. You didn't have anything hardly working below. And
mhm,
so I know you're focused on the trend line and everything and the accumulation, but I do think you also need to look at the bigger picture by way of the liquidity map and say, okay, what makes sense? Where's the market really telling you it's interested in trading? And in this
mhm,
instance, it was at 6,800.
mhm.
Back to you,
Yeah,
Bruce.
thank you.
Yeah.
Vinny, anything you'd like to jump in on?
Oh yeah, okay, yeah. Thanks for calling on me. Yeah, yeah, Duzman, you have sometimes you have your setup, and then sometimes it just doesn't work, right? And they all don't work sometimes. But what you had your checklist set up in place, which was awesome. You identified your trend line, which was terrific, and it also met your criteria. Like Trading His Life said, that a better entry would have been where he had mentioned where that liquid showed up, but that liquid showed up a little late, didn't it? So it was tough to identify. But if you could, I mean, you certainly would have had an opportunity to drive that down to 86. So yeah, so it was it followed your criteria. You might have been able to get a number of points out of it if you were able to identify that liquidity, or if it was there, then
Mhm.
had it. But yeah, so that's it. Right back to you, Bruce.
Thank you.
Uh, Shark, I mean, I think actually, Shark, you probably have some really good comments on this one. Looks
Well, I can.
similar to like a lot of trades you took before.
Yeah, I am the king of jumping into trades too soon, and been, as per John's coaching, I've been zooming out and looking for them big monster participants, and that Tarantino blood liquid offer up above is definitely a little hint that price might just want to continue up there and grab that liquidity. You got in the trade and you controlled your risk, and quite often I myself, we've seen a million trades I've posted where I just get in and right at the beginning of the kill zone. But fantastic risk management. You got in, you took a little hit, you got out. That's how we stay in the game to trade tomorrow and next week and next month. And you've been doing
Thanks for that,
fantastic
sir.
work. You've been doing fantastic work. Keep it up.
Yeah, thank you. One thing about the stop actually is I really didn't move it under the mindset of managing my risk. That's why I'm not too happy about what I did over here. It was just straight out of fear. If I had kept it, I might have been able to close for something. So I guess it's a fine line between it.
I can offer a little bit of advice on trailing the stop. So when I set my stop, I enter the trade and I just come to the other side of the price ladder and I smack it somewhere on the other side of that trendline pivot high. And it looks like that's where you initially put it, right above that trendline pivot high. And then I wait for price to break. In this case, in the short, I would wait for price to break that second pivot low before moving the stop down. So I wouldn't have moved my stop until those aggressive sellers right after where you were stopped out. And then in that case, you could have left it there where you would have, stopped out in the same place, or you could have trailed it in tighter. But in this case, she obviously wanted to go grab that liquidity above.
Yeah. That makes sense. Good. Thank you very much, sir.
Take a look at DNT's charts. He is really good at trailing his stop. He can chime in, but I believe he calls it 2 structures behind. And it's pretty much what, where I decided, okay, I'm going to trail my stop above that pivot, but I'm going to wait until it breaks below the pivot on the other end. So as price moves below one pivot, then I'll grab it and move it a pivot behind. That probably sounds crazy, but take a look at his charts.
I will for sure.
Just to chime in, I saw that liquidity above, but I figured he just wanted to come in just to get that base hit, which is the very next liquidity. As you see, price did go there. Because if you've hold on, if he would have got in where he got stopped out at and placed his stop loss right above, price did reject it, went back to that liquidity, and he could have got a base hit. And then, as you see, it shot right back up to that 60, was making his way up to the heavy liquidity to 68.01. But he could have definitely got a base hit out of this one. All right, back to you, Bruce.
Yeah, thanks, guys. Yeah, I agree with everyone's comment. I'll leave it at that. No, just a couple things. Duzman, way to go, man. I mean, great work, and I think you hit the nail on the head when you first started speaking, and you said you really didn't wait for your higher time frame level, and you kind of knew that, and I think that's what's kind of going on here, because there's just still more buying pressure in here. And then you kind of look at some of these things it's like some of this is pretty good. That looks pretty good. Looks okay. But remember when we looked at Mark's chart? I mean, it was like blood red, and it was trading into all of that liquidity. So it's kind of doing it, but it's and this is pretty far down low. I personally like to see a lot of the higher liquidity getting kind of filled, up at the higher area. It's a nuance, but like anyway, I do like seeing that you are getting some volume. So it does look like it's starting to kind of turn around. So it makes sense. You did everything great. I mean, you marked it up, and I think the higher time frame level would have helped you a lot. And then I also liked what Trading His Life said about taking the single, and then Sharks. Some of his older charts, like he had, it's something to mention in here because this can be a tricky pattern to trade when there's a lot of momentum. It takes a while for a reversal to take place. And when there's a lot of momentum to the upside or downside, a lot of times like you're like, damn it, it stopped me out again. And it's it can be it can be more challenging for sure. And I think there's some of that going on here too, because look at this volume coming in here. And as the others identified, the high liquidity above, and the figure too, the big figure. So it still has some fuel in the tank here, it looks like. But this is another thing that I really like about the setup. You manage your risk. You can hit a single. Shark became the master at kind of managing his risk, and even getting like small profits out of it, even when it failed. And that's quite skillful. I thought I was pretty impressed with that Shark. Anyway, just some other nuances in here. You are selling right when it's transacting into high liquidity there. I would wait for a bit of a pullback. Now it does pull back a little bit here, and funny enough, it does come down to this next little level of liquidity, and then you get a bigger pullback, and then finally it trades back down into here. I'm kind of surprised it doesn't even make it to the swing here at all. It's just not enough sellers. But anyway, just to keep an eye on some of the nuances, like some of these moves in here. It is kind of doing like you would kind of expect something to happen after a move like that. I wouldn't expect it to go like this. So just something to keep food for thought. Look at some of these moves in here, and then how much fuel is in the tank on those moves, and then combine that with some high liquidity. So in that case, that might be a nuance to wait for a pullback. It's something to consider and look into.
Yeah, thank you. That's great advice.
Okay, guys, any last comments? No?
Not really. Just this is just for everybody. I've learned this the hard way. Like when you see those liquidity right there, as soon as the trend line break, just wait for the pullback because there's not gonna be that much gas in it because people are gonna see that and they're not gonna even bother entering the position for it to go that direction. Just wait for the pullback and then get back in after it passed that liquidity. That means that liquidity area right there is broken, and whatever seller is there already got their they already got their price met. I mean, so when it comes back down to that area, it's just gonna flush right through it. That's all I wanted to say.
So right in here, you mean this liquidity? It
Yes,
transacted.
yes,
It kind of went through it again, but it actually bounced one more time. So because this transacted, you're looking for the next level now instead.
exactly, because they had to go back up and absorb that liquidity up there where he got
Yeah.
stopped at
Yeah.
those buyers there. So
Yeah.
once that transact, that liquidity doesn't fail. That doesn't really count anymore. So it
Yeah.
just flushed to the second one.
Yeah. Yeah. Yeah, it's really great. And guys, I know like Steven, you didn't like us going over you for about an hour, but there's some nuances in here, and I just think they're worthy for further kind of depth into it. For example, just take a look, and this kind of observation. I think kind of just try to absorb it. It helps me. I try to absorb things along the way, like what's working today and what's not working today. So, look at some of this high liquidity and look what happens at some of those areas. Okay, every time it hits these areas, almost every time. I mean, the majority of the time it's hitting these areas, it is either going sideways or pulling back, or maybe a small reversal. So you can start to look for that in some of the nuances in here, because this is something that Bookmap's really good at, is being able to show these areas in that relationship. And then you can start to weave that stuff back in. And now, you're going deep into this simple setup, but you're going wide into understanding the context of, these elements. And there's a lot of kind of width to go. As we've talked about many things already, everybody has. So, what are you, after it trades up into here, or maybe it needs to go a little bit higher here, I would look for this thing to pull back to here before, finally it'd probably do something like that, but just keep an eye out, I think, and observation is highly underrated, I think. Just it's something to mention. Okay.
So I posted, it's kind of funny because it looks like Matt, myself, also took that same trade in that exact location as well. Matt posted his, I posted mine. But and my reflection is that there were three things, like, just off the bat, that you can look at, like, and John said already, and it's obvious. It's just that liquidity on the offer right there at previous high, which that statistic is still open, right? So, like, that's like an oversight. And that comes sometimes with looking at our trigger chart, kind of just staring at the trigger chart instead of, like, looking at what actually happened. If you go to I posted a chart in the of my intermediate time frame, and you can just see, like, and you can kind of see it on here too, that there was just it was just like an impulse that just blasted through, like, over 10 points, like, just through a zone that we would anticipate to pose some resistance, but it really didn't. It just blasted right through it and started flagging. But that impulse up, and that was after a strong move. That was after a move down into the close, and it rejected the close, pushed up, and it didn't grind through that 80s area. It, like, blasted through it, and, like, that alone and it's very similar to Steven's chart. If you remember, Steven posted that 10-point move down. It's very similar to that, where you have, like, an open swing down, and then you get this, like, move back up, and then you get this, like, huge impulse out of there, and you're really not trying to fade that move, especially when you have a statistic open and liquidity begging to be grabbed at that location. And that comes with, like, forgetting to, like, take your eyes off the trigger chart for a minute and look at like, what's going on, and at the so zooming out, basically. So zoom out a little bit and like, actually see what happened, and what did it do, and how did it interact with your levels, and yeah, I mean, and if you took the trade, it's like, oh shoot, well, what do I do now? Well, yeah, I think your management was good, and Matt's management was, and my management was bad. I posted my trade, and I took the singles, but I got didn't tighten my stop. I didn't tighten my stop. So that was a trade management error on my part. So we all took this short. I mean, it's when we have this setup, it's a great setup, but it's a great setup in context, and the context is really where it shines best.
Mhm. Yeah, you're right. I should have been looking. Like I was like my eyes were closer to the chart than it was the book map. So I literally need to zoom out. Yeah, you're right.
And the next thing is what's kind of funny about that is the setup, the trend line break accumulation setup, set up for the long. It's set up for the long
Mhm.
beautifully, and we were trading against it. We were trading the pullback when really
Mhm.
the statistic was still open for higher up, and the move down set up a beautiful trend line break to the long side. It accumulated passively 3 levels, and then you see the aggressive accumulation wasn't like that great, but it was there, and it broke,
Mhm.
and it was at a good higher time frame level as well, where it so like it is set up on the long side, so it was a great long trade when we really were kind of like trying to trade against the that huge move out, that huge impulse, when we
Mhm.
could have been trading with it. And if we were waiting, if we were trading in context, then that setup for the long, it was just like, man, it was perfect. The statistic, the passive accumulation, and then the aggressive accumulation after it broke through that trend line and grabbed. You can see that, just that really strong green candle right there. It was pretty good for the long. Like
Yeah,
we kind
yeah.
of just we kind of just were trying to fade the trend, and it just happens because I think it just comes naturally. But yeah, you look out, pull back a little bit, and then the trade set up beautifully in the direction that we could have got, but we
Mhm.
didn't. So
Tom,
it's
what
a great
Tom
learning
calls
opportunity.
what Tom calls joining the marching army.
Yeah.
Yeah, and sometimes it's hard because you think like it's a continuation trade, and continuation trades are kind of tough to grab, but this one actually really wasn't quite. It was a continuation trade, but this move down really set up a reversal.
Yeah, a counter trend reversal with the same criteria, just on
Yep,
on a inner fractal, right?
that's right. Yeah, and
Yeah.
if you weren't so zoomed in, if you weren't so myopic, you could have grabbed this like perfectly with your setup. You would have had to make no compromises. So you would have, if you really kind of like step back and make your analysis, or like you know do your analysis.
Mhm.
It's
Yeah,
tough, but
it's a great point.
it's
Yeah.
mhm.
Yeah, just that, I think there's some really great points there, and how especially these last few days, especially you, Duzman, I've noticed, like, um, don't be discouraged by this, because like you are zoomed in, and you're really focusing, you're really studying, and watching the elements. But the bigger picture right now is kind of volatile, and these prices moving a lot. So where I'm going at this, and you guys have seen me mess up in the webinars. I get so excited about the setup, and like, oh, I want to cover it and stuff, but I'm too zoomed in, and price is moving hard, and I just get run over. So zoom out, look at your higher time frame levels, like what Mark has. This is what it should look like on a higher time frame level, basically. I mean, it in my
Mhm.
mind, at least, is like, you really want to see this stuff getting filled. And then he does say key levels, settlement price
Mhm.
from yesterday. So that's now he's got it. He's got this at his back, right? And he's got his higher time frame level. It would be even better to see a stop run below it and move back up, and then the break. But this one is beautiful. It can be tricky, and um, just But the one thing is, like, even though, like, just because of the way that you waited for these elements in here, it did do something, and you didn't lose much. So good job. you know just now, kind of integrate some of that higher time frame stuff that DNT was talking about, and I think
Mhm.
you got something. We'll be covering like the continuation pattern pretty soon, and you can look for that, or you can see, like, I think you were talking about DNT is like something like, there's one here, right? It's the
Yeah.
continuation, basically. uh, Now, I know it's so easy in hindsight, but it has not come to its key level. You identified it already. Yesterday's high. So it's still got a lot of momentum behind it, and it's just kind of
Mhm.
taking a break. Um, and Anyway, um, keep it up, Duzman. It's really great, and you're getting it down. And now look at, you're reducing risk. I know it can be frustrating. And Matt, I know you've been frustrated by the setup, but I'm still pretty convinced that understanding this context is going to be really, really helpful on down the road.
Mhm.
Okay, let's see. Uh, okay, I think we beat that one to death. And it looks kind of similar again here, Duzman. Like you noticed it, you saw it. I can see the setup here. Um, and you took this one. You took a single on. Fantastic.
Mhm.
How does that make you feel? And again, this is, look at this momentum move to the downside. It is hitting the key level here of 67.50, just below it, which is nice. But it's a lot. This happens a lot of the times too. Just let me. I'm sorry, guys. I don't mean to take up all the time, but like this setup here works best when, like, maybe this is an intraday trade, but it's a pullback on a higher time frame. So that's where this really, really works nicely. But this move here to the downside for these last, or the last day or whatever, yesterday, was or the other day, it was that wasn't like didn't seem like a pullback to me at all. I mean, that was a pretty strong move, and then yet again we did find buyers there, but today, but anyway, it's been going back and forth now, so we're in this back and forth environment, but it's pretty volatile. But a lot of times these days, the move happens and then you just get this. And the momentum's to the downside. The next day, it might gap down to the downside, you know. Um, and just kind of going off of what you were just discussing, DNT, about higher time frame. All right, let's move. See, it's almost 6 o'clock, so it's out of time. And see, so I've got one here from Shark. Got a couple from you, Shark. And maybe you find something you want to cover, though. That might be nicer. But yeah, this is the one that I've got from you. And I don't know, you want to walk us through?
Just same trade the crew's working on, and just focus on ticking the boxes, passive accumulation, break of the structure trend line. This trade is you see the aggressors come in and spike price right after the structure break. I set right there, that initial bit of aggressive accumulation. This is one of those spots, Bruce, where I may have entered in that very first green box, right past where I have that green arrow, where what I call the minor rally high is right below our demand zone. I probably would have entered as price broke that prior to, attempting to learn to be patient and wait for an efficient entry. In this case, I waited for more aggressive accumulation. I do start with my entry order at that minor rally high level. And then as price pulls back into, we're in my key level demand zone here. We're inside the demand zone. Price pulls back towards the pivot low. I just grab that order and pull it as close to price as I can till it triggers. And that's at number 1. So on your advice, this is a replay trade. As per your advice from our conversation, I'm starting to increase my size. So this is a 4 lot.
Nice.
I take 2 off. At number 2, I took that off just because of the way price rejected that, 1, 2, rejected that level 3 times. I'm like, okay, it's perhaps time to get out of this trade. So I take 2 off there, and then, of course, it breaks that pivot and takes off. Doesn't take off and just keep going. It sort of peters out. You got I would have liked to see it break that liquidity and take out my target trend line, but in this case, just working on risk management. So what I was telling Duzman is, you see where I trailed that stop right below that pivot, and she rolls over, takes me out at that pivot low. So good example of base hits. Did not make it to what I'd like to see as a target, but it was an in the money trade for what I would call I don't know if failed is the right word, because it did not make it to the target. But like you say, base hits.
Yeah, sounds good. Vinny, jump in, please.
I have lost.
Yeah, Bruce. I see this was done on October 7th, and I was looking back at the charts. I can see, this trade that you entered kind of fell out of that kill zone time. That time, within the first 90 minutes, it seems we were really kind of getting most of the volume that comes in, and then it kind of dries up a little bit. So you're in a kind of a little bit of a consolidation zone right over here. I remember this, and the really, from what I see here, I didn't enter at this period because it was just too iffy for me at this time and outside of the range. But still, if there was going to be an entry, I can see your buyers are stepping in over here on your volume. I think your number 2 would probably be your best, and the only reason entry point, and that would be because of the liquidity that's coming in, that's forming for your support. So that would be,
I see that.
so that would be an area that I would be interested in entering or taking this long. So that would give me a confluence along with your other your scale from 1 through 4. So that's what I would look at. Now, as far as the target goes, the target would be up there toward my previous high. I don't know if it quite made it up there, but your liquidity came in up over there in your top right. So that could be an area of interest where you would go ahead and exit on or about. A little bit lower, Bruce. Yeah, right there. So that would be my first entry, exiting, excuse me. So that's what I see in this. And I just want to throw it on back. Yeah, I don't mean to interrupt, Sharp, but just to throw it on back about Duzman. I know Moby did a bunch of comments about your trade there, Duzman, and he advocated for the delta volume profile column. So maybe that could be something for you to look at. But just talking about Sharks trade over here, that's some of my insights with the number 2, with the entry justification would be with the liquidity that's coming in over there is forming a support, and you have your target, which didn't come in until late, would be that liquidity up in the top right. But that's it. Thank you for letting me talk.
Appreciate it, Vinny. I know what John's gonna say is look at that liquidity down
right.
below my trend line pivot low. Right down there. Yeah. So no liquidity above, big passive buyer down below. And I'm jumping in the trade as price heads right for that liquidity. Right, John?
Sort of. Kinda. However,
I see it.
you've got a strong move down with huge volume. They go down, they fill liquidity, and they put the brakes on. And then you were able to identify buyers coming in. Your 2 green boxes. That's beautiful. And then, where you took your entry is a great improvement over what you were doing before, because you still see that liquidity below and the potential to go down there and fill it. As far as your entry at number 1, I think I would have waited for some hint of buy volume, maybe a couple of bars at just about where Bruce has his pencil. I'd like
Okay.
to see something that would drive it up. There isn't much liquidity up there to chase after, so it would probably be a no trade for me. But I can see why you did it, and I can see that you're taking much less risk in your entries to give it a shot.
If you were to grab that trade there, John, in that yellow circle, would you put your stop below that orange band of liquidity or below the pivot?
Below, right where that upper one, that upper line.
Right there. Okay.
Because if it fails, then it's going to go on there and chase that liquidity below. So I'm real tight with my stops, as you know. And, but that would be a concern with me. But with all that volume that came in, you're looking for a reaction off of that. So whether or not there's liquidity up there, you can get in and then see liquidity start to fill in after you get in. So you can be somewhat anticipatory for when you can start to see liquidity fill in. And it finally did fill in. Once you got down the road a little bit, we saw that volume come in, then liquidity did come in. But I did want to mention one other thing as far as your exit is concerned. You go up, is your target up there at liquidity, Shark? Is that what your target was?
My target for the last 2 lots would have been that red line, the trend line pivot high up above that liquidity.
Okay.
Behind the green box. Yeah, exactly. That would have been my
But you see that
ideal
liquidity
target.
just below it, that would supersede that for me. I mean, I can see why you would do that, but when that came in, I would be itching to get out. So you made your way up, you got pretty close to it, you fell
I should
back.
have pulled my stop up.
Well, what I'm saying is that you had a little bit of a pullback and then another weak progression. And then you see that big volume dot just about at 908, something like that. You see that,
Yep.
Bruce? That
That big
huge
red one.
volume dot. And then you go up a little bit on real low volume. That's your gift. Take it.
That's my gift. Take
You got to
it.
get out. You got to get out. You could get a little bit more to get up there to liquidity, but after that huge volume, you see the huge volume bars, and then what follows that is very little volume to the upside. That's your ticket to get out.
So where I left that stop, that protective stop static below that previous pivot, I could have just grabbed it on the ladder and chased price right up there and been done and out.
That's my view. That's what I would have done. Yeah.
Fantastic advice. Thank you.
Let's see. Trading is life.
Yeah. Doc, I see the trim line break, but there's another structure there. Bruce, can you draw a line right above, right there, where it says where he has, yeah, right there. Exactly. So I would have got in right there after that broke and put my stop loss right below that structure, right there at the end, right there. Right there,
See that?
exactly. Yep. So
That's a good
once I see that, that's a structure to me because it went up there 3 times and got
Yep.
rejected. So I would have waited for that structure to break, then I would have got in, put my stop loss right there. As you can see, I would have been in no pain because it shot straight up to that almost made it to the liquidity, and I would have got out.
Yep.
I like that. So when
That's
I'm
good.
when
Good trade.
when I'm looking at trend lines, I got my trend line goggles on. I'm not, I did see that triple top there, and I used that as a reason to get to peel my first 2 contracts off. But I didn't, I didn't draw a line there and say, okay, that is a structure. Do I want to see that break, fail? So I just I had my trend line goggles on.
That's a trend line as well. Like Bruce said, it doesn't always have to go across. So I'm always looking. If price rejects twice, I'm drawing a line there because there's a reason why. Um, price keeps rejection in that area. So
Yeah, there's
once
positioning there. There's positioning there.
exactly,
Participants are stepping
exactly,
in and not letting price move past that. I mean, if
exactly. As you can see, it went 3 times there and got rejected. On the fourth time,
yeah, things like
it
that
went
are very noticeable on the price ladder as price just continues to reject the same level. Fantastic advice. Thank you.
D
back
and
to you, Bruce.
D&T, you're up.
Oh man, y'all are funny. No, yeah, there's a lot of just passing the torch. No, it's great. It's great. I like it. I mean, you're taking your money, and it's a good thing to take your money because I mean, it's a reversal trade, so you have to figure out your risk management. It's not easy to do it. So and there's a bunch of different ways to do it. So I mean, I like the way you do it, man. And yeah, I'm still trying to get in the habit of like uh the trade that we covered, just what G just covered with Duzman. It's like we're trying to fade the trend, and like that one that we just covered with Duzman, though, that was a huge move. That was like a 10-point impulse down, and we're trying to fade it. Well, when you're trying to fade it, you want to take like the bulk of your position off at the see, like, this is what I've been trying to think. This is how I've been kind of processing it since, that was a huge move. And yeah, the short might have been pretty valid, right? Like the one that we took, me and Duzman and Matt, that we just covered. And if we had took off, and what trading is life is, we were trying to hit a single, and we would have got the single. And how much of your position were you going to take off? If you took off 1/3 or 2/3 if you took off 1/3 of your position like I did, and you took like a full stop like I did, it
You'd be
wasn't a full
flat.
stop. Yeah, you'd almost be scratched, but you'd actually lose a little bit. You'd actually lose a little bit of money on that. But if I had took off, see, I'm fading a really strong trend. If I had took off 2/3 of my position, then I would still be in the money if I didn't even move my stop. So like, it's
So
like juggling.
the goal, and we chatted about this the other day. The goal is to increase size, right?
Mhm.
And so once again, a page out of John's book, he's got that initial target, takes a chunk of that position off, gets paid, and keeps the rest of that position on. So that's my goal, is to increase size. So I'm just going to continue hammering away at this, get a little bit bigger, take a piece, find the efficient place to take a piece of it off, take another piece of it off, and see how far we can ride what's left. And I just, what that is my mission: increase size.
Yeah, and I completely agree. That's like the goal, and I really like the focusing on like, the setup, because like you can really hone in on it, and then they do it in a way that suits you and fits your trading style. And yeah, and then everybody's going to do it a little bit differently, and I agree. The more like micros make it easy too, because you have you can increase your
Layer
size
in
a little bit easily. Yeah, and then I do it in threes. So I did it
three's
in
the
two
magic number.
yeah, I did it with two contracts for a long time, and I just could not get it. But I did, and I started doing it in threes this past like year, and it's been really helpful. You get one scale, you get some risk off, then you get your second scale, then you're in the money at that point, and then you can
It-
let that whole trade come back on you without any management, and then you'll still be in the money. But once that trade starts to move out of the like consolidation is when I start to trail, and I trail three structures behind.
Three
Usually,
structures.
yeah. So I trail three structures behind, and usually kind of let the trade do its thing, and I try not to
That's how
choke
you
it.
got that monster trade the other day.
Yeah, I was like 45 points or
That was
something.
huge. So one
Yeah.
last thing, this setup, the TLBA, really presents us an opportunity with that 3 lot and more, because even if it happens really fast and you just go initiative selling, initiative buying, there's always that one moment of what I call kill zone, right? The consolidation there. You know,
Hmm.
there's almost always 9 out of 10 times, unless it just flat out fails and context was read wrong, there's a way to get a chunk of that position off and come out slightly red, flat, or even slightly green when the setup fails. That's one thing I really like about this setup.
Yeah.
And it's just taking a piece of the trade off at the right place.
It is. And how strong? What are you trying to fade? Are you trying and like? Did you do you are you what do you know what time frame are you trading, or what's your time frame? And that makes a big difference too, right? And it's putting it into it's putting your trade. What is your trade? Is it a continuation trade? Is it a reversal trade? And so like what we've been kind of all looking at, except let's just say the reversal trades, you're trying to capture a transition, and the transition occurs, you're just said responsive. So like that's why I'm bringing this up. You said like there's one, and then Stephen brought it up too about trading, about Tom trading the open, that those opening swings, you get that opening swing high, the opening swing low. Well, that you're trying to capture a responsive move. That's a transition. Then you can try to capture another transition is the responsive side done, and then you can try to capture that reversal. Is the responsive side done? Like, what did the responsive side do? Like the one that we just covered, where Steven took this continuation short, we made a new all-time high, and the market's kind of taking some profits off the table. It missed overnight high, so the next stat that's kind of open is, and so like Steven missed that initial short in the opening swing, in the opening range. But so that's like the responsive transition. But he was able to capture like all I'm trying to say is like the reversals are trying to capture transitions, right? It's like a reverse responsive transition. Then from that responsive move, then it goes, is the responsive side done? And then when that responsive side is done, then you can try to capture the primary move. And then
Right. What you just pointed out, the counter reversal inside the continuation trade. The
yeah,
counter
yeah,
trend reversal, right, inside the bigger trade.
yeah. And so it really is a matter of, what did the previous day do? What happened in ETH? And then when we're opening, you're anticipating the first transition. The first transition is, what is the responsive side going to do? Are they going to take profits, or are they going to continue the trend? And you kind of get some hints from the ETH and the previous day, and but that's usually high risk, and especially if we're opening in like the previous day's range. I notice, and value, and like the ETH is tight range, I notice I lose a lot of money in when I'm opening like that. So I actually am going to be sitting on my hands more often, because see, I'm trying to trade a reversal, and when I'm trying to capture a reversal and the market's like opening in yesterday's range, well, what am I really trying to capture there in a reversal trade? You know, I'm going to wait for that. If I'm trying to do a reversal trade, I'm going to wait for that responsive side to be done. And then maybe I'll see what happened with that responsive side. And then maybe I'll try to capture the primary move. Just because you brought it up, I just wanted to bring that up because I noticed I lose a lot of money on that in those moves, you know.
Yeah, understood. Fantastic. Thank you. I appreciate
Yeah.
it.
I'll draw it out too, and I'll put it in the chat because it makes more sense on paper.
I just had a couple of comments, Shark. I mean, like, and I am one is like, I'm really happy to hear it's kind of a response to trading is life. And you're putting on the trend line goggles. It makes me kind of a bit like, I don't know, leery about that. It's like it should be market structure goggles that we're putting on.
Right.
And you know, like trading his life, he's identifying, okay, yeah, okay, he knows like this structure broke, but he's looking for like now maybe, you know, the swing in here, but it actually, you know, started kind of doing it here. And then you've already got the other pieces to the puzzle already identified right here. So now you're just looking for a little bit more, and then you write it right up, you know, to, you know, either other swing. I know that's not much, but I would have been holding for
That would have
that
been a
as
good
well,
place.
you know. So
Well, the trendline goggles, Bruce, I've had on for a long time with the supply and demand 1-2-3 R sandwich, right?
yeah.
Just zooming out and trying to take bits and pieces that I can apply, right? DNT's 2-structure, 3-structure thing. John's zoom out, you know, look for them big liquidity areas. Price could bounce all over the place, but over time, with some volume, it is going to gravitate to those areas.
Yeah. And then the other comment I have, I mean, because you're doing, I mean, it's kind of like Duzman's trade or some of the other trades. You're doing everything right. I mean, you're an expert in the setup, you know, and you know, you made some money out of it. And the scaling part, though, I mentioned this like a week or two ago about like, yeah, you know, that's where we're going next when you know, you get really good and confident with the setup and you know what you're doing and you know how to reduce the risk. I know you know how to reduce the risk, but it just like, it scares me to like, for the academy guys here or for everybody, about the scaling part. The confidence has to come first. You have to feel really confident about
I agree.
putting on the trade. When you put on the trade, you know there's going to be losses. So how are you going to handle that? And that could wipe out not only your account, it could wipe out your confidence, and that's brutal. So yeah, I would say go lightly for everybody. Like I mean, go with what you feel is right in terms of the scaling. But that confidence, and you have to have a track record. This is exactly what the pilot program is about. Like, you got to have that. You build up your track record. You build up through experience, through trading, from doing your reps in replay mode, and then forward testing, and then live testing with small size. You build it up, and then you can put some scale into it. And
I agree.
just as long as you know, it just you feel good with it, Shark. I mean, like, that's for you to answer.
Yeah, you know, like I said, I am on the mission for size. That's my mission. I'm not trying to push anyone on that.
Yeah.
I am extremely comfortable with trading this piece of price action. This is, you know, we could take one of these and drop it right on top of my supply and demand 1, 2, 3R trade, and it's the same price action. We're kind of hitting it through a different lens.
Yeah.
But it's the same price action that I've been working on for years. I'm very familiar with it, and I'm very comfortable with it. I'm confident in myself to manage risk. This is a replay. I am working on my execution, my entry, my exit, what I do in the trade. I trade these live, and the mission is the same. Over time, I'm not trying to get there next week or next month, but my goal is size, right? And these prop accounts that we're always talking, that everybody's talking about, my goal is to leave those behind and trade a single account and leverage that account.
Yeah.
So, one step at a time. That's my mission.
Yeah. Yeah.
And thank you for
One,
putting the
two.
pilot program together. And I love the fact that you selected the TLBA to be the first trade.
Yeah, yeah, that's. I'm glad to hear that, because I thought this would be a little contentious, and why didn't you go with the trend trade? And it's like, okay, anyway, thanks, Shark. Let's see. Oh, and one more comment, Shark, is your patience. I mean, this came through, you doing all this repetition and getting very comfortable with the setup, and knowing how it works, the mechanics of it. So you were getting in before, like in here someplace,
Countless hours stuck in the kill zone.
yeah, and then just like sweating it out in here. Anyway, fantastic. That's really says something, because you overcame something that's very difficult, I think, for a lot of people to nice work.
Bruce, I wanted to ask you a question.
Yeah.
If I would have drawn my trend line across like I showed you, is that considered a trend line communication strategy? I mean, because everybody always stuck on it with the line going
The
sideways.
diagonal, yeah. I mean,
Yeah.
look,
Structure.
what it's really
Structure.
about here is the elements are still the same, really. You got to see the passive liquidity in accumulation, and because now we know there's buyers here, and we're going to be leaning on this, and then what we're looking for is we're at a key higher time frame level. Okay, that's really
That's
important.
the upper green line, Bruce.
Where he got the arrow
this
at.
one.
This,
Oh
this-
no, this
The one above that.
No. Where his number two is.
this one.
Yeah,
Yes.
that's a high time frame key level demand. That's
Gotcha.
a demand zone, I think, on a
Perfect.
90-minute chart or something.
Nice. So there's all of this high liquidity getting filled right below it. Beautiful. So now you got something, right? You can kind of lean on that, and you do. And you took a position on it. So understanding those elements is really what's key. But any reversal usually has those two elements, and then the next thing that's really important is the structure it's got to break. So a structure has to break. It doesn't need to be a trend line, and
that's a good example of what I call the kill zone, right? You got
Yeah.
those three eyes.
Yeah.
Top breaks the structure. I'm on a little tiny laptop today. I believe 9 o'clock. It breaks the structure there.
Yeah.
Yeah.
That's exactly right. So it's really about, like, okay, key level, and passive accumulation, and then break of some sort of structure. But and you're already noticing before the structure break, which led to the structure break, is this passive aggressive accumulation.
Accumulation.
Yeah.
So
And
you okay with posting that in a pilot like that? If I were to check this trade and marked it up like that, is it okay to post it in the pilot program?
yeah. I mean, I think the elements are still the same. I mean, it did break a trend line. It broke another structure though too. Typically, to be honest, like what we usually see is there's a small structure here, and that one breaks, and then you see massive, usually you see massive buying in here, and then we're looking for that to go. You just don't get, you get some buying in here, not a whole lot. But then you get it here, and then you get it here, and then you get it even here, and it's making higher lows at that point, and like there you go. There's the break. So you're looking for that break.
She even comes back in, revisits that level. That Tom would call that the under over. Resistance to support. Revisits that level, moves up a little further before she finally rolls over, where John pointed out that big aggressive seller.
Yeah, exactly. And then there's your low volume pullback actually right there, but it's not the setup, but it's the concept is the same though. Anyway, because like it pulled back to where it kind of dropped from, and there's no interest. So once you start to see some selling down in here, and here's a little bit of a structure here, you'd look for it. But
That's your break of structure right there, then you'll get in right there.
yeah, somewhere in here,
Yep.
and then the low volume pullback, you would be looking for getting in up here after seeing this, if it's a low volume pullback. But this is a little bit different. Okay, well, so anyway, how did this end up? This was your replay file or my replay file?
What day is that? That was I believe this one was your replay file, Bruce.
Oh, okay. Because
the one you posted just the other day.
Okay. So this ended up then, I think, going to the upside, right? I believe.
Eventually, yes.
Okay. So yeah, I've been throwing some kind of a little bit of curveballs in there. So
yeah, I think we have to, we can't just practice the perfect trade every time.
Yeah.
We want to practice controlling that, the pullbacks, the ones that fail.
Yeah.
Just execute it all.
Yeah. Another one, Shark, I like is this in here. I mean, since we're going over it, like a low volume pullback. I mean, you can kind of look at some of these areas. Okay, so now it did a move, right? Okay, here's your kind of impulse. Here's another one. Now it did another move, and is there a lot of volume in there? This is pretty consistent, good, strong volume. You already identified that, and there's still some in here, and then here's some volume divergence. So there's not much selling. So if
that's a low volume pullback,
kind of, yeah,
right there where you're pointing with your pencil.
Yeah,
that could be a spot to take the trade right there.
Well, I would kind of wait until here.
Till the break of structure.
Yeah, or at least I see a lot of interest on the buy side, and then when you see this in here starting to, it just is the pressure. I think is just too much. It's going to break.
There's definitely positioning there that does not want price to go higher, and then finally the order's filled, or they give up, or something happens.
Yeah, I mean, anything can happen. Like this might just roll over, and you get this kind of dot,
exactly.
Over here. We never know. But this is looking pretty good in my book, and you identified it perfectly. So. And it's making a higher high, higher highs. Got some strong volume to lean on, and there's your kind of flag or cup and handle, whatever you want to call it. But the idea is the same.
Well, thank you. Thanks everybody. Great sesh. I really appreciate the advice.
This is
thoughts.
one of our longest ones. So let's see, Vinny, any further comments on any of this in here?
No, I think you guys covered every topic possible. So you, you guys did awesome. And you know, a takeaway today, at least for me and for everybody, ought to be patience. I think Bruce, you just said that a little while ago.
Word. That's
And
the
that
word.
was, and that's the takeaway. And you know, this is a democratic process that we're all, you know, which is a great team approach that we're using. And I just want to thank everybody that as having me as your coach.
Thank you.
Well, thank you, Vinny. Thanks for all the good work. Thank you all, everybody. Good session. We're getting you know, I hope people are getting a lot out of it. I do, and much appreciated.
I definitely do. Thank you, Vinny. I appreciate it. And thank you to you, Bruce. I say it every Thursday, but
Yeah.
you're changing lives.
Yeah, well, you guys are doing it, you know. So I created a little bit of framework, and you guys have built it out. So good stuff, guys. Robert, Lowe, a few of the others. We'll go through you guys' stuff. Just make sure you fill out your spreadsheet, or you know, so we can Dan and I can find it, and then we'll cover it when you guys come next time. All right. So thank you all, and much appreciated. Thank you, coaches, and we will catch up with you next time.
Bye, everybody.
Bye-bye.